Most day traders watch one chart, the ticker they're trying to trade, and miss the broader market context. They take a long on Tesla while breadth is collapsing across the entire NYSE. They short the QQQ while 90% of sectors are green. The individual chart looked like a setup. The market internals were saying the opposite. Today, the key internals every intraday trader should watch: NYSE TICK, advanced decline, sector breadth, and how to use them as Confluence filters that dramatically improve win rate on intraday entries. Here are the three internals. 1. NYSE TICK. It measures the number of NYSE stocks ticking up minus those ticking down in the last instant. Readings above plus 1000 signal a breadth surge. Below minus 1000 signal a breadth flush. 2. Advanced decline, or a DD, the cumulative count of advancing versus declining issues. Rising a DD confirms breadth-driven moves. Falling a DD warns that fewer stocks are participating. 3. Sector breadth. At least 5 of the 11 SP sectors green is a risk-on day. The reverse is risk-off. When your individual trade direction aligns with all three internals, you have whole market confluence. When it conflicts, you're fighting breadth. Watch this in a synthetic chart. A trader sees their ticker push to a new intraday high, strong setup, momentum confirming. They go long. What they didn't check: NYSE TICK has been negative all session. ADD is sliding. Only 3 sectors are green. The individual ticker is the strongest stock in a weak market. When breadth finally flushes, the strongest names fall too. They just fall second. The position drops sharply, the trader is stopped out, and they wonder why a good setup failed. It failed because breadth was the whole context they ignored. Here's the rule. Before any intraday entry, glance at 3 values. Where's tick trending, plus territory or minus? Where's a DD, rising or falling on the day? How many sectors are green? When all 3 align with your trade direction, the whole market is on your side and the setup has real confluence. When 2 agree and 1 disagrees, tighten management. When the majority disagree, skip the trade. You're fighting market context for a single name signal. The discipline takes 10 seconds and dramatically improves win rate. Now the aligned setup. Same ticker setup, same long entry, but this time tick is trending positive. ADD is rising sharply. 7 sectors are green. The whole market is supporting risk-on activity. The trade has breadth confluence in addition to the individual chart pattern. Entry: stop below the recent swing low, hold while internals stay positive. The trade extends cleanly because the broader market is moving the same direction. Same pattern, completely different probability, driven entirely by the internals confluence the previous trader ignored. In a real trading setup, configure your platform to show 3 numbers prominently on every intraday chart: current tick, a DD direction, and a sector heat map. The 10-second check before each entry filters out most of the fighting breadth trades that retail traders take blindly. Pros stare at internals as much as price. Retail watches only price. That's the gap. Close it with 3 small windows on your screen and your intraday win rate improves immediately. So, most day traders watch one chart and miss the whole market. NYSE TICK, advanced decline, and sector breadth are the 3 internals that tell you whether the market is supporting your trade or fighting it. Trade with breadth, not against it. Add the 10-second check to your routine and you'll filter out a category of losing trades you didn't even know you were taking. Subscribe for the full method and trade your own plan. Education, not financial advice.